Hey everyone, welcome to Investing in Stocks. If you're new here, my name is Lauti. I started this channel to help people like you get comfortable with investing in the stock markets. So in this video, I'm gonna break down the basics and show you step by step to confidently make your first investment. So let's get started. So the first thing you need to do is find a broker where you feel comfortable to operate with. Here is an example. We have WeBull, we have Mumu, Robinhood, but it's up to you to choose any broker out there in the market where you feel comfortable to operate. So what is a stock? A stock is basically a share of ownership in a company. When you buy a stock, you own a small part of the company and it can bring benefit when the value grows. Stock can pay dividends and it can increase in price, allowing investors to potentially earn money over time. So now that you choose a broker and you know what a stock is, how do you operate them? Well, here we are in Webull. This stock is cool. If we go right here when it says trade, we can buy or sell it. In this case, we don't have any stock of Google, so we're gonna click on buy. Then you have the order type. Limit, you can select limit when you want the price. For example, let's say you don't want Google at this price, you set a limit to buy it at 167. So when you use limit order type is to buy a lower price and the order executes. Then you have market, which is basically you're buying just at the price it is right now. Then you can choose quantities, percentage, amount in money. In Webull, you can operate stocks with only $5. For example, let's say you want to spend $5 in Google, you type it and you're buying $5 of Google. It depends if you want the limit or the market. Here you have the stop loss, the take profit. For example, let's say you think Google is going to reach 180, you set the take profit right there. But for example, let's say Google starts to drop, you will set a stop loss right here. So if the price continues to fall, you don't lose money at all. So let's say you decide to buy stock. You have two basic terms to consider. First, you have long term. Long-term planning ensures sustained success. It depends on how many years you want to keep the stock, but it basically from 6, 7 years to more. Then you have short-term, which results can lead to quick wins. This can go from days to weeks to even months. Well, so diversification is basically when you invest in many stocks. For example, if you have one investment that performs poorly, others may do well, balancing your overall returns and helping you protect against significant losses. That's a good point of using diversification because it can lower your risk when you invest in stocks. Okay, so now we're going to talk about risk management. First of all, you need to know your risk tolerance. You need to understand your own risk tolerance when you choose the right investments. Second, you need to set allocations. For example, this refers to how you divide your investments among various assets, for example, in this case, stocks, to balance risk and return based on your goals and risk tolerance. And third, you need to stay informed. You need to keep up with market trends and economic news to help you better understand what's going on in the stock, and this will help you to make better investment decisions and adjust your strategy as needed. And fourth, you need to have an exit strategy. You need to know when to sell a stock to avoid losses or take profits. Last, I explained about limit. When you can, right here, you can put the stop price. So if the stock continues to fall, it will touch your stop price as marked right here, and it will take you out of the investment. So you won't continue to lose money if the stock continues to fall. Now with all this information, you're ready to jump out in the brokers. First, what you need to do before investing in stock, you need to do your own research. You need to see if the company is good, how are with the numbers, the total revenues. You need to do your own research so you're not risking your money at all. Because one of the most common mistakes as a beginners, which I also did it, so that's why I'm telling you this tip. When I first started to invest in the stock market, I looked for videos like which stock to invest right now, which stock should I buy. So that's the first common mistake that people do, because now in the internet there is many videos of people saying you need to buy this stock, it will explode 10 times the price, and you buy it and it finds out that the stock drops a lot and you lost all your money. So that's why I think it's really important to first do your own risk. You know what money you can expend. um, First you need to use money that you won't need for at least the first month, because when you invest in a stock, you need to know that you are risking your money. It depends which stock do you choose, because there are some stocks, for example, as Google, that if you invest here, the chances of losing all your money are almost impossible. So if you invest, for example, in new stock, a new company that begin 2 years, no, 2 months ago, you have the risk that that company is not known for anybody, can drop. You don't know how they manage the numbers. So I think it's really important to do your own risk, to do your own research. Sorry. So now we came to the end of the video. If you like the video, please let me know in the comments. If you want me to talk about any other topic, to analyze stocks, or just to solve questions, you can ask me directly in my Instagram, which is right down in the comment section. And I hope you enjoyed the video. If you want to subscribe, it's free. If you want to leave a like, please, I will be really thankful. And see you in the next video.